Hey guys, so welcome back to the channel. Today I have another trading strategy which I'm going to backtest for you. I will first tell you about the indicator that we're going to be using, show you a few examples, and then perform the backtest. This strategy involves one trading indicator, and it's the famous relative strength index. The strategy is based on the long time frame, so just keep in mind it's for the long run and should not need a lot of time from you. So it's a momentum indicator used in technical analysis that measures the magnitude of recent price changes to evaluate overbought or oversold conditions in the price of a stock or another asset. So the RSI is displayed as an oscillator, which is essentially a line graph that moves between two extremes and can have a reading from 0 to 100. So this backtest is based on the daily time frame on euro dollar with a rolling stop loss. So here's the strategy. It's very simple. So we go long when the 14 RSI closes above 50 line, and we go short when the 14 RSI closes below the 50. We place the stop loss at the last swing. We don't have a maximum number of trades. We need a set 1 to 2 risk to reward ratio. And when the open profit reaches 1R, we move the stop loss to break even, making a risk-free trade. So let's get on the charts now so I can show you a few trades, and then we'll dive straight into the backtest. So here we are on the charts, Euro USD on the daily time frame. We're going to go ahead and add the indicator. There's the relative strength index. I've got it saved right here, the default indicator. We're going to change the settings, just the visual settings, because we are using the default settings, which is 14. I'm just going to change this color to light gray, as you know, and then leave the settings as they are. I'm going to remove the build background, and there you go. So we go short when the RSI becomes negative right here. So you would have put a short here, for instance, after this red candle, and then put your stop loss at the last swing. This would have been a loss. However, you would have gone long right here after this green candle. You would either have put your stop loss right here, or if you would have kind of played it a bit safer, you would have moved it all the way down there. But essentially you would go again short right here, long, short, long here. I think this strategy could be really good on trending markets. So this is why we're using the daily time frame. We need kind of less entries and kind of longer moves. So let's see how it goes. I'll show you a few examples and then we'll dive straight into the backtest. So here are good examples of a series of trades. The RSI becomes positive after this green candle, so we go long. We place the stop loss at the last swing. It reaches an open profit of 1.47, so we would have moved the stop loss to break even at this level. We would have been stopped out for 0 profit and 0 loss. Then the RSI becomes negative right here after this red candle. So we open a short position, we place a stop loss at the last swing. Same here, it reached an open profit above of 1 to 1, so 1.21. We moved stop loss to break even for a risk-free trade, and we get stopped out on this green candle. And then again, the RSI becomes positive on that candle. We go long, we place a stop loss at the last swing, and as you can see, we reached 1 to 1, so we moved the stop loss to break even. However, we didn't get stopped out on this trade, so we went all the way to 1 to 2. We made a profit of 2 Rs. Similarly, here we go short, that's a loss, and we go long again when the RSI becomes positive right here, and that's a 1 to 2 trade after right here, and that's a 1 to 2 risk to reward trade, which is successful. So essentially over those trades you would have made 0, 0, 2, -1 and 2. You would have profited of 3 times the amount that you risk. So if you were risking 5% per trade, you would have made 15%. So let's go ahead and do the backtest right now and see how this strategy would have performed over time. So here you go, guys, the result for the backtest on euro dollar. We had a maximum drawdown of 19%. We were risking 5% per trade with a risk to reward ratio of 1:2. We had 39 wins, 44 losses, and 17 trades that ended up in break even over a bit more than 1,500 days. We had a maximum number of 2 wins in a row and 4 losses in a row. The total profit was 205.1%. So if you would have started with $10,000, you would have ended up with $30,500. So this strategy is definitely profitable. I think the fact that it only involves one indicator and it's got a fixed risk to reward ratio, it would be pretty simple to code this into an automated algorithm and test it across different pairs and kind of create a portfolio. I think that would be something to consider. But then manually, this is on the daily time frame. You only have to look at this once a day or once every 2 days, or you can set up with your broker some alerts whenever the RSI kind of crosses the 50 line from below or above. It sends you an alert to your phone or to your computer or to your email. That's a possibility. So let me know what you guys think in the comments, and I'll see you in the next video.